How to get a federal tax lien released. In this video, I'm going to show you exactly how to get a federal tax lien released. This is beautiful, this is easy, and it's not scary whatsoever. You'll know exactly how this is actually an advantage. So when you see a federal tax lien against a property that you're looking at, okay, start doing one of these, because that means it's going to scare a lot of people that haven't watched this video and don't understand that it's not a big deal. And here's the deal. I'll make you a promise. By the time we get done, not only will you like to see these, you'll be hunting for these things for the profits that are in there. And I'm going to give you a little bonus. Stick around to the very end. I got a free gift for you. So do that, hit the thumbs up, do the comment, send it to a friend. If you have a question and it's a good one, I might answer it, okay? And I answer all the questions if it's a good one. So let's talk about this. First of all, when I'm buying a tax lien certificate on a property, a federal tax lien doesn't mean anything. So let's just back up. What is a property tax lien on a property or a property tax deed? Either one, the federal tax lien is going to come into play. When a property owner becomes 1 year delinquent on their property taxes, the county has the right to go ahead and sell those. And about 50% of the states do this, where they say, hey, they haven't been paid their property taxes off, we're going to offer these up for auction. So you or me can come down there and put up the money for those delinquent taxes. Yee-hoo, you're good to go. And they'll give you an interest rate, 16, 18, even as high as 25%. Okay, there you go, you're cruising along. Person hasn't paid their property taxes, they haven't paid their property taxes, they're like, okay, what am I supposed to do? How long am I supposed to wait? Well, anywhere from 1 to 2 to 3 years. It's all written in state law. So let's say it's 2 years. So at the end of 2 years, you say, hey, dude hasn't paid the property taxes off, I'm the lien holder of record, I would like to get my value back and start the foreclosure. So in that foreclosure, if there is a federal lien on that property, it's very simple. You would have to notify that. Let's just say it's the IRS for this video, okay? The IRS, once you notify them that you are foreclosing on a property that has a lien on it, that they placed on it, an IRS lien, they have 120 days to come in and take care of those back taxes on that property. Okay, if they don't, trust me, you will wipe that out. So that's one way you can make that happen, okay? But remember, just because you see a federal tax lien on the property doesn't mean it's actually valid either. That lien could have been placed there because the person forgot to pay their taxes and then paid them, but the IRS doesn't come in and actually take those things off. So a federal tax lien shouldn't scare you, okay? It's interesting at best case scenario. The only time it becomes precarious is when you're talking about a tax deed. If I'm going to a tax deed sale, the first thing I want to make sure is I want to pull title on the property and say, these are the liens on the property, these are the liens that are being notified. As long as everybody's being notified, one of those being a federal tax lien, you're good to go. Sometimes I've seen the counties have said, hey, we don't notify the federal agencies about this, that's up to you. Now you got to do some balancing and you got to say, hey, if I notify the feds on this situation, is the value of that lien, if they come in, do I have to pay that off? Or can I get it cheap enough? So that's kind of a precarious situation. And there's not many counties that won't talk to the feds or, or notify them. If they are, I would caution on the side of conservative and say, if you're not willing to notify somebody that's got a lien on the property, why would I want to take the chance of buying the property? Here's the other thing. If there is a lien on the property, most people get freaked out about that. So you can sit there and go, okay, I'm good to go. They've been notified. There's no way it's going to survive a foreclosure on this. I'm good to go. So there you have it. That's how you get rid of a federal tax lien on the property. First thing you got to do is find out when a property is coming up for sale. Whether it's a tax lien or a tax deed, it's a simple process. The first thing I say you want to do is you want to figure out what states have liens and what states have deeds. Now understand, we all know there's 50 states in this country, okay? Not quite, but about half offer tax lien certificates and half offer tax deed certificates. So what I would recommend, you want to write this down. You want to stick with 6 lien states and 6 deed states, and then pick 3 counties in each one of those. That gives you 36 counties to start getting data from. So now you've got some states that offer interest rates, you've got some states where you buy the property free and clear. All counties are required to publish a list 30 days prior to the sale. So now that I've got the list, now remember, a tax lien state is going to have a lot more liens available. Why? Because they've only been delinquent for 1 year. So you could have 10, 15, 20, 30,000 tax lien certificates on one sale, paying 18%. I'm not going to research on 30,000, 50,000 in Chicago, or even 10,000. What I'm going to do, whether it's a lien or a deed state, is I'm going to break the list down by value in the neighborhood. What I want to do is I want to start determining which areas have the value. So let's just go into Waka Waka County, wherever that is. I just made that up. I'm going to go in there and say, okay, what's the average price of a home? So if the average price of a home is, say, $350,000, as long as I stick at properties that have a value of $300,000 more and I'm buying a lien on it, I should be okay. Because a 1-year tax lien certificate on a $300,000 property is only going to be a few $1,000s. Okay? So I know I've got value there if they don't redeem on the tax lien certificate. And if there's a federal tax lien on the property, I'm like, I don't care. When we go to foreclosure, we'll go ahead and notify everybody. And the worst thing that can happen is they come in and pay me my money plus 18%. Boo-hoo. Wouldn't that be a bummer at the Christmas party? I'm only getting 18% of my investments out there, okay? So there's a lot of value in that. Now, if I'm going to a tax deed state, which would be the other 18 counties out there of your 36, you're gonna have a much smaller list. Remember, they're 5 years delinquent, they've been notified for 5 years, and it's going to a sale, and they're losing the property. So they better know exactly, what's going on with the property. They're notifying everybody there, and you're good to go. What you wanna find out there is similar, but remember, on a tax deed, you're gonna own the property. You put your hand up at a tax deed sale, and they say sold, you own it. What you won't own is the federal tax lien, because during that process of foreclosure, they're going to notify everybody that's got a financial interest in that property. And guess what? That would include the federal lien on the property. So you're good to go on that. There are some things that you need to look at with both of them, but there is a lot of things that you need to understand on this. Like, for instance, if they don't notify the feds on this thing, that lien is still going to be on that property, and it could be your responsibility. You don't want to run into that. What if I buy a lien on a property that gets burnt down? Okay, well, most of the value is in the land anyways. I don't want to do that on a tax deed, though. So now I buy a tax deed for $30,000 and I own a burnt down lot. The county's going to slap a lien on me that says, okay, you own this lot, now you need to clean it up. You're like, yeah, Sean. Okay, I thought we're going to make some money. It's like anything. This is good, but you need to know the rules, okay? You got to know the rules. You got to know the rules, as Chris Rock likes to say, okay? So part of the rules is just looking at this thing and figuring out, wow, does the value of this property work? When does the sale happen? How do they want their money? What kind of title do they issue? Tax lien, tax deed, sheriff's sale, whatever the case is. When are these sales? Can I do it online? Can I do it ACH? Can I put it in my own LLC? There is a bucket full of things that you need to look at in order to make this thing happen. And you need to do the research correctly on the deal. Here's a great part about this. A lot of people don't realize this. I can use my retirement money to buy tax lien certificates, and I can earn 18%, 20%, even 25% return in my retirement with no cost, penalties, or chargebacks from the government whatsoever. You just have to have the right account set up. Or I can buy valuable properties all over the United States and own them free and clear for just the back taxes in my retirement account. It's a great way to go, okay? And I absolutely love that. Now listen, there's a lot going on here, and I promised you if you'd watch this whole thing, I have a gift for you. So here's the gift. I've got a brand new course that I'm putting out right now that's going to be your gift. That's right, I said it, free. I will give it to you. All you have to do is click on the link below. It's higginsmethod.com. That's HIGGINS method.com. higginsmethod.com, or just click the link down below. All you have to do is click the link down below. Once you get to that website there, fill out the information in there, put your name and address, and it's yours. It's my gift to you. So God bless and good luck, and we'll see you out there.